All right. Good evening, traders. Uh, Thanks for being here. I'm Dean Jenkins, founder of FollowMeTrades.com, and welcome to this presentation on year-end trading strategies. Glad to have you here. Looks like people are still logging in. Make sure you can locate the chat window on the Zoom webinar platform. If you look down on the control bar, there's a little chat icon. You can click that next to the raise your hand icon thing that people like to push. But make sure you can locate that and use that to ask questions. And yeah, there's Eileen raising her hand. Make sure you can locate that, and by all means, type in questions, comments as we go through this material here. I'd love to hear your feedback, hear your thoughts. Just to make sure you can locate that, go ahead and type in the city or state or country or wherever, the location you're calling in from. It's always fun. It's good exercise to be able to find that. And again, as people are logging in, it's fun to see where everybody's from. Perth, Western Australia. Hey, Linda. Vancouver, Alberta, Colorado, Ecuador. We've already got a couple continents going. San Francisco, San Diego, Colorado, Sue from Rhode Island, Canada. Excellent. San Antonio. Hey, Marty. Little sister lived. I spent last Thanksgiving in San Antonio. This one I'm staying home here in the Seattle area. Alaska, Jacksonville, Huntsville. Excellent. Okay, Benjamin from Iowa. Good to have you here, Benjamin. Okay, so this presentation is year-end strategies. Again, I'm Dean Jenkins from FollowMeTrades.com, and we got about 5 or 6 weeks left in the year, and there's a lot of talk about year-end trading strategies, and so I thought it'd be a good topic to present on here. I've heard lots of questions about it in other forums and trading room and webinars and stuff, so I pulled this material together, and we're going to jump into it. This is being recorded. I will send out a link with a recording. Just a quick disclaimer before we get started. I'm a trader. I'm not a financial advisor, and I'm not giving financial advice. We're going to be looking at some live charts. I'm going to show a couple of my favorite trades. Right now, I'll analyze any charts that you're interested in, but this is my opinion. I'm just sharing what I do for education, information purposes only. Whether anybody places an order, makes a trade or an investment, it's strictly each individual's decision. Only you know what's appropriate for you. All right, here's what I'm going to cover today. Just a little bit about market inputs, all the things that go into all the moving pieces, or at least some of the major moving pieces that go into making the markets move. I'm going to cover, just a short list, some thoughts about year-end theories and strategies that are floating around out there. Then we're going to have a word about reality. We're going to talk about reality just a little bit. I'll review some tools that I use in my trading that help me stay focused on reality. And then I'm going to give you my top tips for year-end trading. So you want to stay with me at the end. I'm going to give you a couple of my current favorite trades that I like right now, and I'll analyze any stocks charts that you're watching. Hey, Johnny from Peoria. Nice. Logan, Utah, Doris. People from all over. All right, ready to rock? You guys want to get this going? Looks like there's still people logging in. Good evening to you. But I want to honor your time and keep this on schedule. All right, so let's talk a little bit about market inputs. So the markets have obviously lots of information coming into them. Here's some major factors that can affect the market. Things like interest rate expectations. The U.S. Fed has certainly kept everybody, kept it interesting. And we're expecting an interest rate, at least one by the end of this year, and then a couple more next year. But they're not the only central bank on the planet. There's other ones. There's the European Union and, lots. That matters. Corporate earnings, currency exchange rates, Changes to the tax code, that's a big deal coming up, right? Got the market on the edge of its seat here in the U.S. Major country GDP projections, economic projections, energy prices, global events, and so on and so on. There's just so many things that go into the financial markets that can make them move. That's a lot of moving parts, and trying to look at all this data and chart it out and understand the intra-data correlations, and if this happens, that means that's going to happen. It can make your head spin just a little bit. If you've tried to do that, I think you know what I mean. Okay, and there's lots, here we are at the end of the year, and there's lots of strategies or theories around, how to trade the end of the year. I Googled it. I spent about 10 minutes on Google checking this out, and here's what I came up with. Again, just for about 10 minutes. First thing here is what's called the pre-holiday effect. Window dressing, where fund managers are having to disclose what their next moves, big fund managers have to announce their trades in advance, and that can cause some movement. There's the Santa Claus rally, the theory that toward the end of December, toward the end of the year, the market, 8 out of 10 years, or whatever the number people use, the market rises toward the end of December. I titled this, "Is the Grinch Gonna Steal the Santa Claus Rally?" Tax loss selling. So people who want to get some tax write-offs for the year, maybe they got positions underwater, they're going to sell them, and that could cause certain things to happen. Dogs of the Dow. So at year end, I believe Dogs of the Dow is the top 8 or 10 dividend-paying stocks in the Dow. People, think, hey, if you go have your portfolio with those, that's a good strategy. There's this thing called buy when it snows, meaning later in the year, sell when it goes, like late spring. So buy now and sell in late spring. That's the trading theory. The January effect. Some people believe that in January, markets go up. Lunar cycles. There are actually people who have spent serious and significant work studying the effect that lunar cycles have on the markets. Yeah, and so on and so on and so on. The theories are endless. So the data inputs are complex, and the theories then and strategies around trading, at least around year end, are endless. And if I pause here in an awkward time, it's because I'm muted real quick to sneeze. I am fighting a terrible cold, trying to get over it here, but I wanted to press on. I had this scheduled, and I've really been looking forward to making this presentation, so I will just do my best. But bear with me if I do pause at a kind of a weird time. Right? Johnny, traders go nuts on a full moon. That's right. Yeah. I was never so surprised when I saw what looked like serious work being done about the effect of lunar cycles on markets. And I don't know, maybe they do have an effect. I don't know. I don't want to make fun of it much. Here's my belief. Here's my absolute belief that as a trader, you gotta exist in reality. And that's not to say, again, to make fun of theories or strategies. I know there's some data that says over the long haul, the Dogs of the Dow or whatever have made money. That's fine. I don't have a problem with that. But I'm also a trader. I'm not an investor. I'm not a buy and hold guy. I can't think of anything more painful now that I know how to trade the markets correctly. I can't think of anything more painful than to sit through a long, prolonged downturn with long positions when I know that I don't have to. That would drive me absolutely nuts. So anyway, successfuls have to operate in the reality of what's actually happening in the market, not what we think should happen. So, these different theories can lead us to what we think should happen. Boy, Santa Claus rally, I've seen it a lot. At the end of the year, the market should go up, right? It just makes sense that people are selling, doing tax loss sellings. Maybe instruments that are down are going to go up or go down based on that, right? These are things that we can think should happen, but we have to exist in the reality of what actually is happening. Our ideas about what we think should happen can lead us to the market, lead us to sectors of the market, create an expectation. But when we pull the trigger on a trade, it's got to be based on the reality of what is really happening in the market, not what we think should be happening. Okay, here's a kind of a fun comparison, right? What have you heard this theory that said, so today is the third Tuesday of November, right? I think. What have you heard this theory that said, hey, 8 out of the last 10 years, the third Tuesday of November has been sunny. Now, if you live here in the Seattle area, that would be absolutely nuts because it is never sunny on the third Tuesday of November, right? But maybe if you're in Florida, that would make sense. But if you heard a theory that said, you know, hey, in 8 out of the last 10 years, the third Tuesday of every month has been sunny, would you act on that? You know, if you were heading out, you know, like here in the Seattle area, you go, well, 80% of the time, third Tuesday of the month is sunny. Therefore, I'm not taking an umbrella. I'm not taking a jacket. I'm in shorts and a Hawaiian shirt, right? Maybe not the smartest thing. And you go, is that really just random variation, or is there a system at work there that would produce those kind of results? Don't be this guy, right? Don't be this guy who acted on data that maybe is just normal variation, right? So here, this guy, he thought that it was going to be sunny because it has been 8 out of the last 10 years in November. And there he is in the rain, right? So in terms of trading on these theories, don't be that guy. He looks sad, right? It was supposed to be sunny, and now I'm kind of wet and miserable. Here's some more reality. This is really where I get into what I've learned, right? What I've learned and what leads me to say that we have to trade the realities in the market. First, there's this concept of price efficiency. This is the premise that asset prices, stock prices, the market, are efficient. They're efficient in that they already factor in or discount all publicly available information. So everything, all the information that is known about individual companies, about the economy, about the probability of a tax cut, about interest rate changes, all that information is in the public domain and it's known, and the current price reflects it. And this is true for a moment in time, for this moment in time. This is different than the efficient market theory a little bit, because the efficient market theory says because all information is known, you can't beat the market. Well, I think that's wrong because I'm doing it. I'm beating the market, and I know lots of other people who are. Okay, but price efficiency says everything that's known, all the known publicly available information is reflected in the current price. That's an important concept, right? That's a reality. The current price of a stock could be the only reality, right? Price and volume are indisputable realities. They actually happen. What did the last share trade for, right? How many was that block? That is real. Okay, Benjamin Graham, it's called the father of value investing, big influence on Warren Buffett. And he said, in the short run, the market is a voting machine, but in the long run, it's a weighing machine. So in a weighing machine, he's talking about weighing earnings. So that's in the long run, that's multi-year, right? The market, if a company is going to consistently grow earnings over time, then their share price will go up. The market will weigh those increasing earnings that they actually produce over time. In the short run, right, the market's going to vote. And people vote based on what they think should happen, what they think is happening, how they're responding to all known publicly available information. They're voting. It's an auction, right? So these things tell us again that current price is the only reality, regardless of the Santa Claus rally or the January effect or any of that, right? That's all factored in people's expectations, and there's millions of participants in the market. And what we end up with is what's actually happening, right? So we don't want to be that guy who's standing out in the rain because it was supposed to be sunny. We want to have a plan, right? So I'm going to now talk about, I've riffed a little bit on, just trading in reality, and you can kind of tell I'm a little bit skeptical about these theories. That doesn't mean I don't think they may not have validity. Again, I'm just going to stay focused on reality and what the market's actually doing. And if it's going up, I don't care if it's because of the Santa Claus rally or the January effect. It's just going up. That's reality. I'm going to trade it up. If it's going down, trade it down. So I use these tools to kind of cut through all of that, and it helps me discern and analyze reality. So I use Dow theory, Ichimoku cloud, Elliott wave theory all together. And I'll just give you a really fast run through how we do that. And then pretty quickly here, we'll get to some real charts and we'll see it in play. And I'll show you some of my current favorite trades. So Dow theory says in an uptrend, you got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. As long as you have that, you got an uptrend. Or as long as the price goes on to make new highs, and when it pulls back, does not go down to previous lows, right? You got an uptrend, and a downtrend is lower lows, lower highs, lower lows, lower highs. And as long as price goes on to make new lows, doesn't go above previous highs, it's in a downtrend. So this is important because if you believe the market's going to go down for year-end tax selling, but it continues to put in new highs like the S&P did today, right, and not go below previous lows, it's going up. Right? That's the reality. Price is going up. This is helpful because we can now know also when trends end, when they change. So when does the trend begin? 3 data points: high, higher, low, new high. Got an uptrend. Higher highs, higher lows. It ends when it doesn't put in new highs and when it starts taking out previous lows. Oh, bullish trend's over. Okay, and so if you see this pattern on the S&P 500 in about 4 or 5 weeks, you see a low, lower high, new low on whatever time frame you're trading, the Grinch may have stolen the Santa rally, right? Because that looks like a bear trend beginning. This is what the bear trend beginning, it looks just like the end of the bullish trend. Low, lower high, new low. And that's going to continue down until it ends. That's a helpful tool. So I use Dow theory in my trading just for trend confirmation, trend continuation, trend ending. I use Ichimoku cloud. This handsome fellow here, Goichi Hisada, developed it back in the 1930s. It's a really cool indicator. It's predictive. It predicts out into the future what some support and resistance areas are going to be. And I'll show you what it looks like on a chart. And again, be sure to type in questions as we go along. Happy to field them. So just type them in, or your comments if you agree with me. If you don't agree with me, I guess you could type that in too. But, so Ichimoku cloud, let me show you just all the elements on here. There's 5 key elements, right? There's a Tencom, which is a fast line, similar to a simple moving average, just calculated a little differently. So they have a fast one, they have a slow one, it's called the Kaijun. And then we have what's called a span A, and then a span B. And they create this shaded area. Between the span A and span B is a shaded area. It's green in an uptrend, it's red in a downtrend. And that is called the cloud, in Japanese, Kumo, right? And that cloud, you can see it's being projected out into the future, several bars, right? Several bars out into the future. And it's predicting a support area. And you can see in this trend, once price broke through the cloud, it pulled back to the cloud, but did not go through it, right? It projected support, an area that price would come down to, but not penetrate. That's pretty powerful to have that. And the thicker the cloud, the stronger the support that it is projecting. That's pretty cool, right? It can confirm a trend change in conjunction with Dow theory when it breaks the cloud. That's why I like to have a backup. You can have some false calls here on the Ichimoku cloud when the trend gets started, right? So if we use Dow theory to confirm the beginning of a trend change here with a high, higher, low, new high, as it breaks the cloud, wow, that can look really good. And then this trend is underway and the cloud is projecting the support areas where price may come down to, because again, price doesn't go in a straight line. And if you're in this trade and it's long and it pulls back, you want to have confidence that, yeah, we expect it to pull back to here, no big deal, up there it goes. Yeah, expect it to pull back, no big deal, right? And until it really breaks through, that's when we know the trade's over, the trend is over. So, Johnny says his problems is always trying to trade in the false signal area and never been able to get Elliott Wave to work. Well, I'll show you how I do it here real quick and see if it's helpful. Okay. Patrick is asking, what tools did I use in 2013 to 14? Same tools. I started using Elliott or Ichimoku Cloud. I added it to my trading in last year. I've had it in my system about a year and a half. Yeah. Okay. We talked about that. So let's talk about Elliott Wave. So Elliott Wave's easy, right? You got 144 permutations here of these different grand super cycles and primary and minuet and whatever. Yeah, come on. That's ridiculous, isn't it? Nobody can memorize this stuff. I don't buy into it. So the reason what I do is use a very simple, repeatable approach to Elliott Wave. And here's the book, Elliott Wave Technique Simplified, written by Bennett McDowell. So I didn't write the book on Elliott Wave techniques, but I helped. I wrote a chapter in this book. And Bennett is a great guy. I've worked with him for years. And he was my mentor that helped me turn the corner to becoming a profitable trader. So this book is up on Amazon. I believe it belongs on every trader's bookshelf. It's a great resource. And again, we're only looking for 3 setups, right? There's really only 3 trade setups I care about in Elliott Wave. I'm looking for this first big impulsive move, wave 3. If I can catch it, that's awesome. After wave 3, and once that's mature, I'm not going to touch it. I'm waiting for a correction, and I can trade the correction if there's enough profit. After the correction, I can trade the next impulsive move, wave 5, if there's enough profit. So that's only 3 trade setups. Wave 3, 4, or 5. That's all I'm looking for. They're super easy to see. That's right, Rebecca. We look for those 3 data points getting above the cloud of a high, high, or low, new high. And I'll show you that here. And I think there's a slide coming up here. Okay, as I said, I'm fighting a cold, so apologize if my voice isn't the best or if I have to stop here and sneeze. But I want to do this, so we're going to make it happen. All right, these wave 3 and 5 can occur in a bullish or bearish trend, up or down. They just flip this thing upside down and it looks exactly the same. So here it is on a chart, right? And we're not trying to trade wave 1 or 2. They're too small. We're trying to catch this big move, wave 3. And then if there's sufficient profit, we'll trade the correction to wave 4. And then we'll trade wave 5. And we can, what's really cool about Elliott Wave is you can project. You can project with a high degree of accuracy where price is going to go. So after a big impulsive move, about 70% of the time, it's going to correct eventually down into a Fibonacci retracement zone between these 2 blue lines, 38.2 to 61.8 Fibonacci retracement. About 70% of the time, it's going to land there. After it does that, a high percentage of the time, once you have proof of the new impulsive move beginning, there's a high probability it's going to extend into a Fibonacci extension area between 61.8 and 100%, these green lines. Phenomenal, right? It's really cool. So here's the wave 3 entry, and we got, look, a high, a higher low, and a new high, Dow theory, 3 data points, as it breaks the cloud. Boom! There is a nice entry coming out of this channel, right? This was down, high, higher low, new high, breaking the Ichimoku cloud. There's a phenomenal setup. Now we can trade this all the way up, let it correct. There wasn't enough profit in the correction to trade it, so let's catch wave 5 there, right? After the correction, we're looking for proof, and this is where I talk about reality, right? We can look at this chart. This was Vail, a mining stock, right? We can look at it and go, well, I had a big move up. I had its correction, right? It's starting to go up, right? Maybe it's December. No, it was June, but whatever. What we do is we look for evidence. We look for absolute, clear, impartial evidence of what's going on. And here it is, a high, a higher low, a new high, Dow theory telling us the definition of an uptrend beginning, and it's breaking up through the Ichimoku cloud. There's your trade entry, right? That's unambiguous. It's not based on phases of the moon. It's based on the reality of price movement. Boom, there it goes. Got a nice target up here. So that's how we combine Elliott wave and Ichimoku and Dow theory into a pretty powerful trading system, right? And then we use Dow theory to manage the trade. So to manage our, where are you going to put your stop when you get in? We're going to put it under the previous higher low, and then as it puts in new highs, higher lows, higher highs, higher lows, higher highs, we're going to trail our stop up to those previous higher lows and do it here. And we're going to let the trend stop us out and tell us when it's over. We're not going to arbitrarily jump out of the trade in the target zone. We will take profit along the way, but we're going to let that thing run. We're going to let the trend play out, let the winners be big. You heard that. Cut your losers short, let your winners run. Here's how you do it. You let them run by letting price tell you when the trend is still continuing and when it's over. Okay, so I got through some of the tools that I use to help me stay focused and grounded in reality, to be able to, again, I might poke fun a little bit at some of the theories. It's okay. They can draw our attention to the markets, to sectors of the markets, right? But ultimately, I want to be trading based on reality, based on what's going on with price action, right? The markets can move dramatically at the end of the year, and they can be a little erratic, right? A lot of the institutional traders out, so sometimes the retail traders are in control, and so the market has a different complexion, different feel to it. So here's my top tips for year-end trading. And that first is, don't succumb to bias confirmation. That is probably the hardest thing as a trader, is when you have an expectation about the market and you're just sure this is what it should do. Right? And I've been fighting that for a while because I think the market should be correcting. I believe the market is due for a correction. I believe it's going to happen. And every time we put in a new high, I struggle to believe it. But my trading, the actions I'm taking, is based on what's actually happening in the market. Now, I am trading long and short, right? And there's individual charts and sectors where a short trade is absolutely warranted, right? But, I do have a bit of bias confirmation that I just can't believe the market's these levels and continuing up. I'm not succumbing to it. I'm not letting it affect my trading, right? And I think that's important at the end of the year and anytime. Maintain risk control, and particularly in a volatile market, you can even tighten up. So I use a 2% rule. So I size my trades based on where my stop is to not lose more than 2% of my total account on any given trade. If at year end you're concerned about what the market's going to do, or concerned about some volatility, tighten that up. You could go to half positions, right? Maybe use 1%. What you don't want to do is be greedy. And we're going to get to this other quote by Benjamin Graham here, right? And that kind of, maintaining risk control, only trade with a position size that is pain-free, such that you don't worry about it, such that if it was lost, right, or if it hit the stop and lost the predetermined amount, it wouldn't be a setback. Because if you're really trading with too big of a position size, and if you're worried about it, and if the trade loses, and that's going to be a setback, and that's going to put a big hole in your account that's hard to recover from, or if it's just going to put a big hole in your confidence that'll be hard to recover from, you got too much in the trade, right? Don't do it. Don't do it. Trade a pain-free amount such that if it loses, you're okay with it, whatever size that is, right? And you can develop confidence and increase that over time. But if you're losing sleep about trades, or if fear, whatever, is making you break out of your trading plan and make bad decisions, it's not good. Good things aren't going to happen, right? Let the theories draw your attention to the market, but only trade the realities. And then this last thing, my top 5 tip here is just to be realistic. I love this quote. If you go onto Goodreads, you can read a lot of quotes from Benjamin Graham. He had a lot to say. He's an interesting guy, right? But in this context, he kind of wraps all this up, and he said, before you place a trade, and he said investment, but we're traders and it applies, right? You must deliberately protect yourself against serious losses, risk control, and you must aspire to be adequate, not extraordinary. You must aspire to adequate, not extraordinary performance, right? Because extraordinary gains, what's required to get extraordinary gains? Anybody know? Anybody take a guess at that? What do you have to do in the markets to position yourself for extraordinary gains? You have to take extraordinary risk. That's right, Benjamin. You have to take extraordinary risk. If you're not willing to take extraordinary risk, you'd be better off being realistic and aspiring to adequate returns. No, this Intelligent Investor is written by Benjamin Graham, different author. The Bennett McDowell's book is the Elliott Wave Techniques Simplified. Okay, so what do I consider adequate gains? Well, here's what I'm doing. This is my website, followmetrades.com. And here's what I've been doing year on year. 2013 was a phenomenal year. We had a couple of really big home runs, the acquisitions that doubled and stuff. It was awesome, and bull market was roaring. But we've averaged, across these 5 years, about 30 to 35%. Slowed down. Last year was a little tough. This year, we've already closed enough trades to beat last year's performance, so I'm really happy about that. We got some really good looking trades here, right? All right. Yeah, if you want your comments to be public, each person's different, but if you want your comments to be public in the chat area, select all panelists and attendees. Otherwise, the default is just panelists and only I'll see it. Yeah, S&P as of Friday, S&P is at 15.65 year to date. Dow Jones 18.5. It's up about another point from that. But we're 50% ahead of that, right? So I consider this. I'm really pleased with these results. These are consistent, solid results year over year over year, right? If you started with 100K here, you would have over 400K compounded here. So pretty pleased, and I believe in complete transparency. So on my website, you can see the details of every single trade that I've taken year to date and in previous years. I list it there. And here's my trading stats, a little more detail. And I believe in verification. So I've hired an external CPA firm, and they come and audit my results here. So I started that in the second quarter of this year. So external CPA firm comes in and audits my results, what I claim on the website. They go look at my brokerage statements and say, yep, you did it. Hey, thanks for that comment, Joe. Thanks. Okay, back to the presentation because I wanted to, so I got through my tips here. All right, let's go look at some live charts. Yeah, that's what's next. Let me show you, well, let me look, what are you interested in? I'll use this method I've been talking about. What do you like? Now, here's the disclaimer, right? It's going to, I have to look at like 10 to 15 charts to find 2 to 3 good ones. That's the thing about Elliott Wave is when the pattern is there, it's a super powerful thing. It's not there on every chart. And I think people get frustrated when they look at a chart and try to force the pattern onto it, and it's just not there. All right, John would like to look at KR. So that's, disclaimer up front that most charts we're going to look at, I'm probably not going to like the pattern, but that's okay. Kroger. Kroger bought chain Fred Meyer's, who was a Northwest staple for years and years and years. So what a downtrend and this big, huge gap down. So here's what we're looking at on Kroger is this is wave 3. This is really easy to see, right? It's just a big dramatic price move. There's 1, 2, 3. Now, is Kroger getting ready to reverse up? It kind of looks like it, doesn't it? And we can measure with a Fibonacci retracement tool where we would expect it to retrace to. Because why do I think it might be beginning to retrace? Let me zoom in a little bit. Current price. Because high, higher low, new high breaking up above the Ichimoku cloud. And I also got some other indicators showing growing positive momentum. See how this green's getting bigger? So the target is between here and here, between about 28 bucks and about 33 in this zone. Now, I got the 200 simple moving average on here. That's kind of a last filter. That's probably the most popular indicator in the world. And a lot of people are responding to it, so that can be some resistance. So that would be the only worry on this trade, is that it might hit that 200 SMA and fail, and you'd have to be okay with the profit up here at about 25 and a half if you were going to take that trade. So that's interesting. That's worth looking at. KR, Kroger, URA for Robert. Global X uranium. Yeah, that's a messy chart. That's it had a big, huge move from 12 to 19 percentage-wise. Is a big move. 100% retracement, then a new low. So it actually, yeah, it's just swinging around. I don't like it. I said up front, only a few charts. Out of 10 to 15, only a couple are going to be okay. That one's not for me. In TES, so I had looked at this before. Things have changed. You can see I'm changing my scale. What I want to see is I want to get the big picture on this thing. And so this is it's a big uptrend, right? This trend started here and it's continued. This is all still wave 3. So it's a very mature uptrend. And it's too late, in my opinion, to try to get in it. And it's too early to try and short it. So there's nothing there. It's that easy. Nice trend. SQ, is that square? Boom. Fairly recent IPA, back 16. And look at this trend. It's just off to the races. Again, too late to get long on that. It's beautiful. Right? I would have been interested in this when it broke. This high, higher low, didn't go lower. It broke. So when it broke out of there, that's when wave 3 started. We talked about that with Dow theory. So right above that high, that's when I would have wanted to get in. That would have been a phenomenal trade, right? And still in it. Still in it. That was for V. Davis. Shop, Benjamin. When Benjamin talks, I listen. Benjamin's got good trade ideas. He's been through my training. And I see what you're looking at. Here's 3, 4, and 5, right? This one's getting ready to go. So let's just... Yeah, I think it looks good, Benjamin. Got a target of 149. That's a nice one. Very nice. Brad. I am KTA. Well, I said before, the market current price reflects the market's opinion of all known public data. Your opinion is not very high of this, is it? So it is this Ingalls Market A. Yeah, nearly 100% retracement. So this is 3. The next move is that we would be looking for would be up. We do have a high, higher low. If we were to break up out of the Ichimoku cloud and up into here, take out that high, there might be a possible long on that, maybe. And the price zone on this would be something like this, up between 31, 38. That's not too bad. JC, bots. Bots. With that little fizzy candy when we were kids. So that looks like it was an IPO earlier. And oh, it's a AI ETF, must have launched recently. Big, huge, impulsive move. It was too new. I wouldn't have traded it, but there was a setup back there. It's too late to get in. Next, it's just too late. I do not chase mature trends because I'm trying to catch new trends. When's this going to end? Yeah, that's the problem with a mature trend. When's it going to end? Don't know. It's cool to look at though. BAC for Johnny, Bank of America. Bank of America was a trade that probably the single trade that convinced me to go be a technical trader. I bought this back here at $5. I bought Bank of America at $5. I sat out the markets for a couple of years, got really discouraged as a fundamental trader. Bought Bank of America at $5 in 2009 and took it up above 15. It was the most stressful trade I'd ever been in. I didn't know what to do. Right? Should I sell it? Should I take my profit? Is it, what's going to happen? How crazy is that? A successful home run trade and it's totally stressful. So I ended up from that point forward learning about technical trading, risk management, and everything. So glad I took it. I'm glad it tripled. And I'm glad it led me to what I do today. But I have no interest in going long on it right now. I'm waiting for the short, and it's not ready. It's still above the Ichimoku cloud. Nice little pullback here, and we do have a low, lower high. If we were to get a new low and come busting down through the Ichimoku cloud, then we might be looking for a pullback on this, but we're not there yet. Paul, HIMX. That is just a random messy chart. Wow. Hey, Eva. We miss you, Eva, in the trading room. How about Zen? Michael. Benjamin, that's a good comment. Yeah, don't be stressed. Zen. So this was 3, 4, 5. It's over. Beautiful Elliott wave sequence. I don't even have to measure it, right? That was 3. Perfect retracement. There goes 5. Right into the target zone, I guarantee it. After you've looked at a few thousand of these, you almost don't need the lines. Too late. What happens after 5? A meandering complex A, B, C. You don't want to try and trade that. Go find a better pattern. That one's beautiful, but it's over, my opinion. These are probabilities, not certainties, too, right? X, U.S. Steel. U.S. Steel had been very tradable years past. Got a little dicey. So it did have a complete sequence up, 5 waves ABC, then this wave 3 down, then a correction. The next move we're looking for is down, but it's still above the cloud. It's not ready to try and trade. It's not the clearest one on the planet. So STX, oh, I'd love to look at STX. We traded that earlier this year, and it was a home run. It was beautiful. Seagate. Yeah, we got short up in here, right under the cloud. Took it all the way down. It was sweet. A little bit chaotic now. Yeah, not loving it anymore. XOM, ExxonMobil. You see, I play with my scale here until I can kind of see the big picture. Yeah, I don't like it. I don't like it at all. You know, ExxonMobil is a huge company. It's like BP, right? Global oil company. They got a lot more going on than just the price of oil. And what I don't like is that for this big move up, the retracement's too deep, and it's just it's not a clear pattern here. If you like energy, we were in XOP, I believe it is. The ETF. Yeah. So this actually still looks good. We had a nice move up, nice correction. If we were to go high again, above this high right here at about, if I get a line, no, we use this one. If we were to put in a new high at 37 bucks, call it, it's got a really good chance going up into the mid 40s. So that'll look pretty good. That'll look pretty good. No, you were, as I was doing that, you were typing in XOP. Awesome. Gilead. Well, I'm glad you asked because I told you I would share a couple of my favorite trade ideas, and Gilead is one of them. So let's go ahead and take a look at that. I'm going to mute for just a moment here. Bear with me. All right, I'm back. I'm back. I told you I'm fighting a cold. Enough said, right? So Gilead, here's this big impulsive wave 3 down. Here's a perfect correction right to the Fibonacci retracement zone. That's wave 4. Wave 5, next bearish move down. Looking for it to get down into this extension zone, down to this green line, down below 50 bucks. And what we want is one more low. So if Gilead can get down to 70.93, one more low, I'm in. It's triggered. We're going to be shorting Gilead. So that's going to be an awesome one. Here's one we're in right now, and I will share it with you. We are in IPHI, and this is long. So here's wave 3 up. Here's the correction into the Fibonacci retracement zone. Clear evidence, the reality of higher highs, higher lows, new highs. Look at that thing. We got in it just a couple days ago here at 40.33. Nice pop today, almost 5%, up at 43.12. And we got a target on this thing up here at 54.52. So you can still get in that. Stop is at 37.39 for now. Some more highs, we'll be trailing that up. But we're already in nice profit on that. And got a couple notes from folks pretty excited about it. And yeah, you can still get in that one. And plenty of room to run. So there's a nice trade. IPHI. I love it when I find a stock like this. Infi Corporation. Who ever heard of them? Right? Everybody's heard of Amazon and Apple and Facebook and the FANGs. And I love finding these unknown stocks that have great liquidity, great option markets, and trading them like mad. These are fun. It's like a treasure hunt. And it's pretty fun when they make good money like this too. So there's two, Gilead short and Infi Corporation long. Marty, it did channel a great deal, and we caught it when it broke out, didn't we? We took it here right as it was breaking. Didn't take very long at all. Yeah, thanks. I'll bet you're making note of that one there, Eva. It's a good one. All right. She wants to know what the option. I'll give it away. Sure. We are trading that one, IPHI, with the April $35 call. April of 18, $35 call. I like being deep in the money, big delta, plenty of time left on it. Okay. Marty, yeah, he's very happy with the IPHI option. Yeah, it's what kind of profit we in on that one? Yeah, 20% profit so far on that. That's not too bad. Huh? Okay. Here's things. If I were to sum what we've talked about up, right? You know, the context was year end. I talked about being grounded in reality. Offered some of my tips. These things kind of transcend any season, and that is, you know, you got to have great trade setups. I've showed you my setups, right? You got to have great trade setups with high probability outcomes and a great reward to risk ratio. You got to be able to manage risk. You know, you saw the Benjamin Graham quote, right? Don't let it take a big chunk out of your account and have reasonable expectations. And you got to have a way to manage these trades. You know, if you have all three of these, this is what it takes to be a consistently profitable trader, in my opinion, right? Do you guys believe that? Do you buy into that? That you got to have these things, and if you have them, great trade setups, risk management, trade management, it'll make you a profitable trader. Go ahead and type it in if you, or raise your hand. Click the raise hand button. Here's the time where you click that button. If you agree, yes. Okay, great. There go the hands. Cool. Thank you. Okay. So I'd like to ask you a question then. How many of you are excited about some of the trades we just looked at? Or maybe you're a little bit unsure, because we looked at IPHI. There's an awesome trade, but you got to be able to manage risk. You got to be able to manage the trade once you're in it. Gilead's getting ready to trigger. It's going to be an awesome trade. Again, you got to be able to manage it. Some people have that. Some people don't. I hear from a lot of people that they need help with that. They're not consistent in how they're managing risk, how they're managing trades. Okay, so also, do you feel a little bit like this guy here? Maybe like I gave you a ton of information. And you're like, well, that sounded interesting, but I have not absorbed it all. So what I'd like to do is spend a few minutes and go over a special offer I've got that's related to what we just talked about. And I'll lower all the hands here. And I got some folks jumping in with testimonials. You guys are awesome. I sure appreciate it. They're jumping in with their opinions there if you see it, and no, I didn't even ask. You guys are awesome. I got really good customers. I don't know how I got so lucky. Okay, so yeah, if it's okay, I'm going to spend a couple minutes, just go over a quick offer here, a way to help you with what we just talked about if you were interested at all. So again, I think it's essential. A lot of people agreed that you need great trade setups, you need risk management, you need trade management, right? And what is that worth, right? The picks year to date are averaging on a $100,000 account about almost $2,000 a month, right? We've made 24 grand year to date, so yeah, about $2,000 a month, right? We're not even done with the year yet for a $100,000 account. It's pretty good. You know, as part of my service that I'm going to talk about here in a minute, you know, you get about 4 hours of detailed trade consultation per month with a weekly live chat where we go through all the trades and I answer every question you have, look at your trade ideas, and do quite a bit of training. One-on-one consultation. To get that, you know, to go on the website and book that, it's like, you know, it's about $1,000, and there's only one of me to go around, right? And then ongoing education as a part of the service. There's videos, there's documentation, the weekly chats. I one-on-one consultation, email support. So ongoing education. If you were to total all this stuff up and you had to go buy it, kind of on a line item basis, it'd be at least about $5,300. There's high quality information here about how to make profit. So far, again, $100,000 account, $24,000 of profit year to date. So it's a pretty good investment at $5,300. But I'm going to offer you these things, great trade setups, risk management, trade management. It's not going to cost you $5,300. What I'm going to offer you is I do this every time this year. It's kind of a Black Friday thing, and that's an annual subscription to my stock and option picks. Most of the year I offer this as a monthly subscription, but I'm going to offer it as a annual subscription right now. And here's the link. I'm going to go ahead and post that link over in the chat window. You can go check out. There's a little video and some information there as well. You can find out some more. So there's the link in the chat box. But you can get a 1-year subscription to my stock and option picks. Right? It comes with a 100% money back guarantee for 30 days. So during that first 30 days, you'll get to participate, see the picks. Right? This is what it looks like on my website. As a customer, you log in and you have access to a video every week where I go through all the trades, new trades, trade any changes, any open trades. I tell you which ones you can still get into, which ones still look good. Here's a calculator for risk management, and then complete details of every single trade that we've taken, a chronology of every move we've every move we've made. You get text updates on your phone if you want them. You get email updates. We have a weekly live chat you can join in, find out what's going on, what the latest is. Again, complete support, and you get a one-on-one consultation. So for attendees of this webinar, I'm going to offer you a huge discount. The list price, it's $127 a month. It's the monthly thing. That's $1,527 per year. You can get it right now today for $897, 40% discount. And again, you get right away, you get a link to set up a one-on-one consultation with me to get you off to a great start. Weekly live chat sessions, text updates, training material. I got great picks in addition to the ones I just showed you that are ready right now. Yeah, if you want to go monthly, Johnny, you can just go to the website and go monthly. That's certainly available. I'm just offering a discount, right? You can do, here's weekly picks, learn more, and you can sign up for $127 a month. It's a great value. You can just sign up right there. But I'm offering this discount here for those who are interested. 40% discount and $897 for a full year. But wait, there's more. If you sign up during this session for the 1-year annual stock pick subscription, you've heard a few people talking about the trading rooms and some testimonials there. I'll offer you, in addition to the $897 for the picks, you'll be offered 90 days in the trading room for just $37 extra. Yeah, so this offer is for the picks, the stock and option picks, but you're going to be offered the trading room as well for a super deal, $37 for 90 days. So you can check that out too. So that's a really great deal. Okay, yeah, so I have 2 key services, the live trading room and the picks. And this offers for the picks, but it includes an offer to get into the trading room and check that out too. A substantial discount, only $37. You kidding me? All right. I think we're going to go ahead and wrap it up. Thank you very much for showing up here on your evening on Tuesday. Really appreciate it. Enjoyed the interaction. Thank you for the symbols. It was fun to look at your trades there. And I'm going to hang out for just a couple questions, a few minutes, and see if you got any questions here. But other than that, I'm going to plan on winding it down. Thank you, Eva. Nice. Eileen, thank you. Yeah, thanks, Sue. Yeah, I got to get over this cold. This is killing me, right? No, Benjamin says, doesn't see the trading room offer at the web page. Here's how it works. When you, let me get that link. So you go here to this thing, right, the link I gave you. And once you fill out your information, there's a page 2. Yeah, are you kidding me? Anyway, I'm not going to fill all this out and bore you. When you fill this all out and get ready to place your order and go to step 2, then there's a thing to get the trading room offer. Okay, you have to go to page 2, step 2 here to get it. All right, that's how it works there, Benjamin. Will there be a webinar tomorrow? We're going to have the trading room in the morning, if I have a voice, and Wednesday night we'll have our regular live chat for the option for the stock picks. And so, yeah, if you're thinking about this, you can be in the trading room tomorrow morning. You sign up tonight, you can be there with us tomorrow, assuming I can talk. I can always type though. And thanks, Gary. Nice commentary there. All right, Marty, thank you. Okay, any other questions I can field here before we go ahead and wrap it up? We did record this, and I will be sending it out, a link. Typically, it takes a few hours to render the video and get it all the way we want it, and we'll send it out. I will post that link one more time for anybody who's interested. We only offer this time of year, so you're always welcome to sign up for the monthly, but this kind of Black Friday, Cyber Monday era discount, 40% discount is pretty substantial for an annual pick, plus the offer for the trading room, pretty deep discount, pretty cool. All right, well, I think I'm losing my voice right about the right time, so I'm going to go ahead and wrap it up. Thank you very much again for being here. I'm sure we'll be there. We'll see you at a future webinar, and I look forward to that. All right, take care. Hey, have a great holiday. Happy Thanksgiving. Take care. Bye.